Hi, everyone. Thank you for joining at the end of the conference here. Today, we're going to be talking about the future of CRE investing. We're going to be talking about how AI and automation is changing the investment process. I'm Nicole Weldon. I'll be your moderator. Today, I'm with Modern Ventures. There we go. Yes. I'm with Modern Ventures. We're a venture capital firm out of Chicago. We have about $600 million under management. Our LPs are large institutional owners and operators of real estate. So our focus, my team's focus, is to find and source and invest in technology companies that solve the problems of those operators. We look at about 4,500 companies a year and select under 10 to be in our portfolio. So we intimately understand how tricky it is to find solutions that move the needle and separate what's hype and what's not. And that's what we're going to be diving into today. So let's kick it off. We have a group of panelists that have various backgrounds, very unique backgrounds, and they're all different. So let's start with name, company, role, and like a 20-second Shark Tank pitch on what you do.
My name is Harshit. Shah. I lead the technology at DivCore Capital. We're an investment management platform with both equity and credit arms. Equity, we market ourselves as DivCore Vest Services, and then on the credit, it's LoanCore Capital. We own and operate all different types of assets, vertically integrated for office, life sciences, some development, mixed-use properties, and lend money as a private lender.
So I didn't know I was sitting next to someone so famous. All the phones went up and decided to take his picture. So we're between you and lunch, I guess. So thanks for being here. Marty Pupil, Stream Realty Partners. We're a service business as well as an investment management company. So we have close to $4.5 billion of assets under management, 19 markets across the country. I run our Southern California region. But we also have a brokerage and property management business, fully integrated to service large LPs across the country.
Hello, everyone. I'm Ohad Porat, Chief Investment Officer of Farpoint. Ohad is a tough name, and it is like the tough names panel, but Farpoint is a vertically integrated last mile industrial investor. We purchase last mile warehouses all over the country, about $4 billion in AUM. And I'm the Chief Investment Officer overseeing the investments, the acquisitions, asset management, property management, and development. And recently, we also started to be a lender in that space exactly.
All right, thank you. Okay, so let's kick it off. First question being investment teams are expected to move faster and operate leaner than ever before. What do you guys think has changed in the market that makes efficiency such a big competitive advantage today? Marty?
I'm ready to jump in, sure. Look, speed, go, no-go has always been there. I don't think that's anything new. I think everyone's getting faster and faster. Information's gotten better over the last 20 years. In the last 6 months, I think the expectations from our brokerage partners who are marketing deals, especially marketed deals, is they're looking for answers in days, not weeks. Give you a case in point, we're looking at a 90-acre site in Orange County that the GSA is marketing through CBRE. It'll be on the market for a total of 15 days. They want offers, non-conditional, 5% hard money down, and close once they get GSA approval. So the whole process will take 120 days from the first initial marketing till the time you close. So your ability to go quickly and make decisions, we're fortunate to have AI tools out there that our team is leaning on today, and there's a variety of them. I think if you hang out in the hallway here, I got hit up by 4 different people in my brain. Since I got here, I don't know where to go anymore. I was clear on this panel, a little less clear now. There seems to be a lot more than we thought. But yeah, underwriting, entitlements, zoning, all of that, comes down to it. And like I said, we've got different, we can get into the tools if you want. I don't know if you want to go there right now, but speed is certainly becoming a bigger differentiator.
Yeah, I agree. I think that speed is something that we can definitely continue to improve. Let's put it under the productivity bucket. I think where we see a lot of efficiency right now is in sorting the opportunities, because, let's say 10 years ago, and you've been a broker, if you want to get a deal, you need to know a broker that knows the deal, that knows you, and it was a lot. The distribution channeling of deals was much harder than it is today. And today, every shop, every GP, they see a lot more opportunities. So the ability to sort through these opportunities and to know where to focus, we leverage the current technologies quite a lot to help us do that. So obviously it can go and do the underwriting as well, but we'll get there. But in terms of where I see our team saving the most amount of time is responding to opportunities, yes or no, fairly quickly, and keeping everybody happy during the process.
So I think from, to add to these two gentlemen, and as a technologist, as an operator in my role, we as a company, what we realized, like taking, one step back, is investment team members we don't have issues with them working long hours, working hard. Access to information has gotten much better. But where we see the, so-called friction these days is more on the operating model of investment teams. Like, whether it's how, various different regional teams are kind of, what processes they're following for their own areas, what type of their data is fragmented to a certain degree, and in most of the companies, right? They're across different systems. And then lastly speaking, the manual handoffs are still there, right? Whether that be seeking approvals, whether that be like, really moving the process from acquisitions to asset management and stuff like that. So I think a lot of the good operators have identified that is where the huge friction is. And there are technology solutions and process solutions which can kind of, which has had impact in our companies for sure, to reduce the cycle time and stuff like that. And I think, in office and some of the innovation markets that we're looking at, I think the wind is changing. Now there are multiple bids on different offices that we kind of put offers to, and so on and so forth. And so I think we have to kind of move at a faster pace.
Great. So I'm hearing a lot of the whys behind your reason for automating. Let's get a little bit more granular and specific on what workflows you're automating, whether that's like OMs to memos or underwriting or quarterly reports, and then what tools you're using, whether that's a vendor you're using or if you're building it yourself. But I would love for each of you to share one or two examples of what workflows you're automating and how.
I think in our pipeline of solutions, and we have here Mike from our team that's leading these efforts, we're trying to automate everything. So, Mike's vision, and that's kind of the company's vision today, is that agents will run the show and we will just kind of stay there. And when he explained that to me, it sounds science fiction, but to some extent, there is a roadmap for that to happen if technology continues to improve and we continue to do the right things. The things that we have today, for example, again, just to name a few, so like I mentioned, sorting opportunities, to do a quick of the envelope underwriting on a deal automatically on 10,000 deals or whatever the inbound is right now, is something that we are using right now. Recently, we've launched something that we call it Ready Credit, which is a credit analysis, because credit is something that we found takes time, because we need to get an accounting firm or a specialized credit person to review financials and to study the company and to interview the CFO. So we found that there's a way to do it with AI. We also interview the CFO, but the LLMs are taking the conversation and making data points out of it. So for example, this is something that we moved the process from a week turnaround to 20 minutes, assuming it's been operated correctly. So that is another item that we've done recently. And I'll let these guys shoot some more, and I'll add some more after if we want.
So we talked about it a lot offline. From our perspective, there's speed, obviously, but then there's how many more deals can you see with your existing team? And so we've used, excuse me, AI on the front end from digesting offering memorandums. So especially on marketed deals, you get tons of information. The time to sort through that can take days, certainly weeks, depending on the size of it, if it's existing or a development site. So we were looking at a development site in Southern California recently that was marketed, and one of our analysts found a tool called Smart Capital Center, which will take your OM, will synthesize the entire thing, will summarize it, will upload your Excel model into there, will take into consideration public information as it relates to entitlements, zoning, planning. And so we were able to all see that as a team in one dashboard, which was amazing because usually it'll sit in various Excel, forward of a general plan from a city, a scenario, a summary from the analyst. You make one change in the model, you got to recirculate everything to everybody. So the analyst is spending a lot of time, what I would call doing administrative work. So this dashboard allowed us to be in real time, live. Everyone can make changes to it and see what happens to the returns, to whether or not you want to go or not go. So it was very efficient. We got through it in less than a week. It still required human, sadly for you, it still required some human interaction in terms of whether or not, there's a gut feel. At the end of the day, we still haven't gotten to a point where we found an AI tool that says our capital partners are okay at a 6 yield on cost, or we're going to stretch to a 5.8 to get the deal. Are we trending rents? Are we not trending rents? So there were still aspects of it, but we were able to get to that conversation a lot faster with that tool. And then obviously, I think there was a panel 2 panels ago. I think everybody in our firm is going to get fired because we do use Claude illegally to do Excels and financial models. So I know the folks at Trammell Crow don't want to be doing that, but I know we have done it. It's been very beneficial, very quick. And again, I think my big takeaway this week, and I don't know what it is for you guys, but having a better plan or a better process in place to start addressing a lot of these things, and because we're using a lot of other people's information. On the acquisition side, we're either trying to find it ourselves from third parties, brokers are sending it to us. There are privacy concerns that I don't think I'd fully grasped before the last couple of days, but something to be thinking about as we go forward.
So I think to add to this, we've talked about this for half a decade now. Data has always been critical, right? And nowadays more so than others. Information is there. How do you make it usable has been critical. So like 10 years ago, I got hired at DivCore, and my first job there was to build a data layer that was connecting into our operating systems, whether it be forecasting, whether it be actuals and budgeting system, like our leasing pipeline systems and so on and so forth to kind of drive some of the decision making. So I think that creating that data layer and really embedding that into various different processes that our team members have, whether that be an accounting team, whether that be property management team, whether it be asset management team, has been like really, really great. And one of the beneficiary products that came off on top of that was we built our quarterly valuation model, which is an Excel plugin, which all the analysts now, hopefully the school, all the way from schooling, they start teaching some of these innovative technologies, because back then, if you studied real estate, you studied Argus, you studied Excel in colleges and stuff. And so we developed the Excel plugin that would essentially tie into this data layer and create a blank Excel workbook into a completely unlevered model. And then team can layer in the debt, side of things and make tweaks and stuff like that. What that really did to us as a business was that made us consistent. Every analyst, whether that be a new person or a seasoned person, they start with the same model and same formulas and stuff like that, right? So I think that kind of really reduced the amount of time it took to kind of go through the quarterly valuation processes and stuff like that.
I have to say that I agree completely with the consistency comment. Consistency is, for a company that's doing, let's say, a lot of deals and they have multiple individuals in the process. We have, for example, 20 acquisition people. having consistency through the process, making sure that the guy in Atlanta is underwriting to a similar standard than the folks in Florida is critical. And using, automated underwriting models helps a lot in that process. That was when we launched those systems in the beginning. That was one of our main goals. We said, I don't know if it's going to be so accurate, if it's going to make an alpha, but at least it's going to level the playing field, and we will know who's too aggressive and who's less aggressive, and it's critical.
Okay. Before we move on, I just want to double click on it. Is there any other workflows that are maybe unique outside of the standard OMs or underwriting that we're talking about that you think was like, that you had an aha moment with, or any vendors that this room should absolutely know about and they're your favorite?
So I could tell another example. I can't name vendors or investors or other stuff. I'm
fair.
Not allowed to. But that aside, as I kind of started the conversation on my end, my perspective, like it's always been, there is inefficiencies in the operating model and the manual handoffs and approvals and stuff like that. And this is not really type of product that we rolled out, but we essentially took all the approvals, on our property budgets, how those get approved at all levels, from property managers to asset managers to portfolio managers and so on, and the final approvals. We centralized all of that on a system. So we did that, investment committee approvals. So you're not going in and chasing people. And that takes so much time and so much wasted kind of admin work. And so I think that has been incredibly valuable on how, we track and hold each party accountable in our company.
Maybe a couple of quick ones, touching on acquisitions. I saw that was one of the headlines of the panel. For example, that's been for a while. When we're getting a deal from a broker, it just sends an email, and that automatically being transferred into a pipeline software, email to deal, we call it. That's easy. We've been doing it for a long time. One of the things that we're experimenting now is, I think the technology is there now, an agent that will talk to brokers or talk to properties and have making the unsolicited campaigns just backwards. It's not a real estate conference per se. So an unsolicited campaign is where we, as a real estate company, we're trying to cast a wide net and trying to find owners that are willing to sell their properties. So what we do is that we call them or we email them. So to do that through AI agents, that is something that can bring huge value if it's done correctly. And we all know those LinkedIn cold calling messages that we all ignore. So to do something that you want to ignore, to do something that can give a true conversation vibe, that's what we're experimenting now, and I think can be a huge perk.
So I think for us, we don't have internal technologists building anything. So it's incumbent on our teams. And like I said, we're in 19 markets and we're focused on industrial and office predominantly. And what's very manual is the information sharing. So how we're underwriting is consistent. Where the deal lands, how things end up, how we execute is not easy to share that information. So it's a lot of email, either to our property management group, the asset manager on the deal point person, and then we're coalescing all of that as best we can into Excel spreadsheets. But the ability to see what's going on around distribution warehousing in the markets that we're in, trends that could be happening, how pricing's happening, where cap rates are moving, where is debt more aggressive, where is it less aggressive by the way it's doing a deal, even down to terms and conditions. Debt is a large part about it. We haven't talked about it on the panel, but how do you automate the debt process and get to that conclusion a lot faster in your underwriting would be awesome. So I think seeing deals that are getting done from the debt side around the country and who's available and who wants to do them, but ultimately it's just that data gathering and sharing of the process, of the workflows, and the end result would be a huge win.
Great. Awesome examples. Thank you. Okay, moving on, I want to talk about human capital and how you're thinking about your teams as you're automating. So Ohad, I know you had some comment, a small comment earlier, but how are you thinking about your teams? How have your teams changed as you're automating more?
Sure. So I think that we share the view that analysis is going to be a commodity if it's not already. And therefore, for example, that is true life example. If we think about an acquisition person, historically we've been 50-50. It needs to be 50% analytical, being able to calculate an IRR or at least understand the concepts of it. And 50% needs to be a social person that can create relationships and get deals into the pipeline. And today, call it 2026, we kind of instructed our teams, let's go 90-10 or 80-20. We need to bring the relationship people because the analysis is coming with them. It's like the stroller that follows you in the airport with the battery. It's the same thing. It's becoming a non-thing. And I think that, and we all think still in real estate until Mike's vision will come to life, where agents will just talk to agents and we'll be on the beach. Until that point, the relationship is going to be the part of real estate that's going to be unique to humans. And that's what we emphasize when we build our new, call it human capital. And also every hiring, and I heard that from Bank of America CEO to you name it, when you bring young people into the organization, you want them to be AI natives. Even if they're accountants or even if they're asset managers, it doesn't matter. They need to use those tools. They need to be amenable to use them. Otherwise, they're not in fashion, like Mr. Levy said this morning.
So I think it's different. It's caused us to have a lot of reflection because it was easy when you hired analysts or associates. To Ohad's point earlier, come in, learn how to do the underwriting, learn how to calc IRR. Then you'll get into the sourcing world if you've got a personality and you can get out and network, and eventually you'll run deals. I think that entry-level position is changing dramatically, and it's how fast can we scale them. I don't have a solution to this, so this isn't a solution. This is just more the initial thought process we're going through right now is what is that entry-level path? We're fortunate that our sourcing capabilities are very good around the markets that we're in. You still need those people networking and leveraging to get the occasional off-market deal, semi-off-market deal. But how do you get a new to industry person starting to get experience where they can make a judgment call? Because ultimately, our fund investors, our LPs, however you're doing it, whether you're doing it with an LP or an investor, you're going to do the presentation on a deal. They're going to want to know your gut check. Why are we doing this deal? We got the IRRs of 16. It's a 2x multiple. It's going to take 5 years, blah, blah, blah. Okay, got it. But what's the art? And I don't think we've done a very good job training young people about the art of real estate. And it is more than just numbers and IRRs. I think the last 15 years, with the advent of Blackstone, BlackRock, Apollo, it's all been IRR driven and equity multiple driven. And I think it's been said here, it's been said elsewhere. I think we've taken care of that. AI will take care of that. We'll have like unbelievable financial models and understandings. But how do you do it so you're actually making money and how people trust you? We talked about trusting the bots. How do we get back to the real estate business where your investors trust you? And how do you help young people get trained up to do that?
Yeah, so from our perspective and my individual perspective, when we talk about automation, when we talk about human capital and AI, right now I'll kind of dive a little deeper into it. I think us as a company, our strategy and mantra right now is not investment automation. It's more investment augmentation and human capital augmentation. We're not trying to create products which allow our LPs to tell the risk factor and essentially we invest in real estate similarly. So it's our strategy is that where we have seen and as a technologist here on the panel, where we have seen technology in general, AI, where it's really had an impact on is to really tackle the I call it the information bottlenecks. Right, so things like working on documents, abstracting key information from it, essentially using if you're working on a deal, we as a company have legal checklists, like, legal guidances that our general counsel and real estate lawyers have put together. How do we empower our, directors and investments to like kind of see and get ahead of like how, what do we need to tweak in our docs and so on and so forth, right? And giving the team members that we have like access to every information that they should have access to, everything from fund docs to lease agreements, right? And everything in between. And how do we make that like, that's where we've seen the most value. And AI has really like been quite beneficial in that perspective. And bringing the conversation back to like the human capital side of things. I think I have some team members from our company. We have always run lean, and that's been the thing that our operating officers have kind of drilled it in us. And we've never had the luxury of having more resources, and I always had to fight for it. So I think when we think about what we can do more as we bring on more assets under management and grow our investor base and stuff like that, I think we have a lot more runway with our current employee count and employee staff to do more things given some of these technology advancements that we're seeing. And really like as the information bottlenecks gets slimmer, the cycle times of evaluating a deal gets kind of slimmer as well.
I just want to add to that because I think a lot of conversation around AI is reducing headcount. And as we all prepared for this and got together, I think all four of us came to the conclusion, and I think we all knew it instinctively, it's really not about reducing headcount. Yeah. It's doing more with what you have, but it's also doing it better. Give you an idea, I mean, we were underwriting this deal. We thought we'd had the site completely understood. We put it through Claude, and Claude determined that there was rail access that even the owner didn't realize cut through the property. So this was like an aha for us, like, wait a second, like so many people have looked at this, everyone's underwritten it, and the Blackstone who picked up that there was a railroad servitude issue. So that was a little scary on our end, because maybe to Michael's point on your team, we're all out of a job. But yeah, I think the important thing is not to go into this thinking, oh, we're going to reduce on the acquisitions, deployment side anyways. I think we all agreed it wasn't necessarily about reducing headcount. This is not like a back office function that by automating, you're just getting rid of a ton of people in your organization. And I just wanted to piggyback off on that because I think it's an important context.
I love that. The next question was about value. So I think we started talking about it. Of course, at the end of the day, everything that we do needs to reduce expenses or increase revenue, right? That's why we're here. Do you think your teams are able to calculate the ROI of your initiatives, or are you still experimenting and learning? Like where are you in the journey?
I think all the examples that we mentioned and the discussion around headcount and so on, that is, like we said, that's the productivity bucket. And I guess you can measure that if that's of importance. I think where we are putting most of our resources into the game, beyond the productivity tools, like we said, an OM to email or a credit automated, we're trying to create an alpha in investing. And I think the technology that we have today, the biggest value that it brings to an investment firm is how to have better underwriting, not just faster or not just more at scale. If that was a great example, if you can underwrite a deal and know it a little bit better because you use those tools on the lend side, you made an alpha to your investors. An example of two models that we built over the past 5 years, even before the LLMs are, these are models without LLMs. These are models that are traditional data science models. For example, we have a model, we call it Rexy. We have a name for everything. We call it Rexy, and Rexy, what it does is that it predicts the market rent for every industrial building in the country. And 3 years ago, it was okay, and today, it's celebrating 5 years. It's smarter than all 5-year-olds probably. Today, it's more accurate than our investment team. So we actually use it as an input to our rents. Now, there's a lot of discussion, a lot of how do we get to that point? We aggregated data for a decade and we cleaned it up and we sorted it up and there's a full discussion there. But our goal was, let's create an alpha in underwriting. So that's one example. The second example, something that we launched very recently, is a renewal model probability kind of a model. And that says basically the notion is if you rent an apartment or if you rent a shop, even if you don't know if you're gonna renew your lease when the lease is due, you have a tendency to do it. Whether it's because you live there or whether because it's you've been there or you invested in that space. So we're trying to leverage that logic and say, what is the renewal probability of this tenant to stay in his space in 2 years from now when the lease comes due? And people here that are underwriting real estate, on commercial real estate, underwriting the renewal probability is a huge factor in IRR. That's a make or break of many deals that we're doing. So just a few examples of how we're approaching alpha in underwriting rather than just say, it saved me an analyst because we can automate that.
From our perspective, I think it's too early to start tying things to ROI because we're testing so many different tools that exist and you got to pilot them, you got to bring them in, you got to work with them. We're also working internally on our own workflows. And, one thing AI caused us to do is I think we had a pretty good idea of our processes and workflows internally, and we've been doing it for a long time. This has caused a lot of us to stop and say, okay, have we been doing it correctly? Are we doing it? Could we be doing it differently? And so workflows, processes, we're spending time on pure ROI. We're spending X amount of dollars on ChatGPT or capital markets analytics or whatever the tool is. Candidly, the two are unrelated because if, like what just we discovered with the rail, what that brings to the deal and our ability to win the deal, win it for our investors, get it executed and won, outweighs whatever we spent on Claude that month. Like it's completely irrelevant. It's not looking at back of house. Like on our property management side, if you started inputting more automation, and I think, how much that would cost you to have bots in place versus humans, then the calculus behind that is different because it's much more of a commodity type work than it is trying to buy an asset and execute on a game plan.
I agree to everything that you guys said. What I'd say, I think I like the alpha, and I think especially some of these newer AI technologies, and I think in our company what we are seeing is this is the first technology wave where investment teams have been the most psyched about it. They are the most. They are that and legal teams. They are the most pro users of it, right? But in terms of value, I think we have seen tremendous value in a few different areas. It's giving people information access, okay? So as I was kind of telling, like, you have all these different documents and a bunch of things, but every single time if you're an asset manager and had to look up a particular tenant and renew and understand what the clauses are, right? Now it's a matter of like you just asking over audio or typing things. If your architecture is built to do that, the systems today out of the box kind of once it's set up right can allow for that. And so I think that that being able to understand information and act on it, like if you are a CAO, Chief Accounting Officer, and if you understand like what my travel expenses have been, how much have people reimbursed for this particular type of subscription, right? All of that data took controllers at least a few hours to wrangle it in prior to the technologies that are there now. So like the decision-making process and how quickly we act on it has gotten even better, right? As AI has rolled in. The other area that we've seen tremendous value in is in custom app dev, right? So I have a background for writing a little bit of code and developing applications and stuff like that. And I think when we look at for the type of company we are and the type of focus on technology, the amount of custom utilities and tools that we've been able to write and the amount of lines of code that is getting generated and not touched by software developers on my team, I think we're seeing tremendous value. I think there's, like I was telling someone yesterday or the day before, that we're seeing like on certain projects, north of 50% of the code written by, AI tools. And that is excellent for a company our size where, technology is a service provider. We're not a revenue generator, or we're not, like, we do add to revenue and I've thought about it. So I think that's been phenomenal. It's quickness of decision making.
Harshit, can you talk more about buy versus build? And I know this topic is talked about all the time, and it was talked about in the last panel, but it sounds like you do both. How do you determine where you're going to build, where you're going to buy?
Yeah, I have a high level kind of thesis around it. But at the end of the day, like, as I said, we're not a technology organization. We are very much focused on being the real estate partner of choice. And we want technology to enable that. And as we think about that, we always want to buy and build both, right? And so the way at a high level that we go about that decision-making process is, if there is something very unique that we want it to be, like, it could be our modeling process, it could be how we track deals and whatnot, and how we do that to create the alpha. We always want to build it. We don't want to, as much as possible, and if the technical skills are there, to develop and maintain it. Maintenance is, if you're building it, maintenance is a key part of it. We always want to build it. The other thing is, if I have a business unit, because we do internal consulting as part of our team, if I have a business unit that comes to me and says that I have this problem, I want to track these like deals, like I want to track my pipeline, and if it is just very, very high level and it's not going to add real material value to it, like, I want to build it. It's just, there's no point paying an annual subscription to someone if it's not that tremendously valuable to the organization. So that's the way we think about it.
Love that.
Yeah, from our perspective, and again, we don't have a large technology group. Two things, right? Is it tactical? Is it your everyday operation? And then does it differentiate you? You use the word alpha, but does it make you different? Does it really allow you to stand out? And if it's a standout issue, that's usually at this time still a customized solution, because it's usually an idea that's come up that we haven't seen a tool for, so we'll do it ourselves. The other part is data, right? I mean, we haven't talked about that on this panel. Like, most of the data we consume is public information data, but all of us as operators also have our own set of private data. And are we willing to share that or not? And I think until we all better understand how open AI is, can it be closed? Is it ever truly closed? Is kind of another one that factors into, are we going to build it ourselves so we control the openness or closedness of that data? So again, for us, a little more at the infancy stage than you guys. But if it's easy, it's out there, it exists, it's not a game changer, it just makes things more efficient, no reason not to buy it. If it's going to be a game changer, we'll invest in with our own solution.
Yeah, it's a tough question. I think that every day we have a different kind of a view of how the next 3 years are going to look like. If we're trying to listen to the founders of the biggest LLMs or the biggest AI companies, they would tell you, don't buy anything, forget about it. You'll be able to make it by 2027. 2027, they said it last year. 2027 is coming. I don't know if it's going to be by 2027, but there's a good chance that by 2029, you will literally be able to build software in an instant. So I don't know. It's a hard decision if you now need to decide on an enterprise software for your company for $1 million ticket. It's a tough question. So I don't know. Well, we have always been trying to do it for ourselves. I think the quick rule of thumb is that if it's system for a cause solves a problem, an accounting software, you go to a Yardi or MRI or whoever is the competitors in that landscape. For example, we are doing a lot of acquisitions, so we wanted to develop our own acquisition software because it's not just a CRM pipeline. we also added analytics to it, and communications to it, and marketing platforms to it. So I think it's kind of it's something that we don't know what will be the vision in 2 years. So it's tough. Mike just showed me that he built Argus over the weekend. So it's going to take a while until we're going to do stuff like that, but it may not be too much into the future. So it's a tricky one. I don't know.
I think one last thing I'll add to this conversation, right? Because I think it's always a great topic. Sometimes we as operators and owners and just, organizations are required to buy certain solutions because of our, relationships and partners, whether that be investor wanting a certain investor portal that they're used to so that they can see the entire portfolio data in one, slot, whether that be our brokerage community using a certain tools across the, assets that they kind of work on. So I think there's some of the things are nuanced where, there has been certain so-called industry standards that just come with it, right? And so, those solutions aside.
And also, again, it's a little bit boring to a lot of the people, but for example, cybersecurity, we are an SEC registered company. Yeah. So there's a lot to it. A software that we can build in a week might take us 3 months just to figure out the kind of a security around it. So I think that will always be a thing, and I think large software developer companies will always have an edge. So this is why I'm saying I don't know. It's a tough one, case by case, probably.
Thank you guys so much. We have a couple minutes left here. Just wanted to open it up for any questions. I think we have a couple. One right here.
First of all, thank you for sharing all of your words. All of you guys spoke about alpha and creating that alpha, and obviously everyone in this room wants alpha for their own firms. But as intelligence becomes more commoditized, analysis becomes more commoditized, the ability to do all this stuff becomes commoditized. Where does the flow of value actually flow to? Is it the operating company? Is it the models? How do you create that lasting alpha if everyone is, essentially...
Great question.
I think I'll pick it up again. It's kind of around human capital. It's the art of real estate, right? It starts by saying, where's there an opportunity? Because marketed deals are marketed deals, but you've got the sourcing, the understanding of the opportunity. So 2 years ago, no operator who's at this conference or anywhere in America would have bought an office building in downtown San Francisco. If you understood real estate, you understood San Francisco, and you could get capital to do it with you, all day, every day, you should have been buying up all of downtown San Francisco. A model's not going to tell you that. I don't think. Maybe. I don't see it today. It's not there today. So I think there's that. Then there's the execution of the investment. So I think you touched upon it a little bit. The operational efficiency, extracting complete NOI, knowing the right time to sell. AI can help with some of that, can get you there. But there are people who've made huge mistakes in trying to time the market, right? So I think that'll help. The execution side will become a little more automated. But I think the front end is recognizing things that bots aren't recognizing today. And I don't know, they might down the road and we won't need to be here. But there's still the art of that real estate of what is a good deal, what isn't a good deal, what's a contrarian thesis where no one is going, and where can you get outsized returns?
I think, to give a technological explanation to your question, beyond the people, which I agree it's so far, the data. I think the data is the biggest moat that at least we're trying to invest money in. It may not be in the future. I'm opening that up as well. But just for us, we've been collecting methodically data to feed our models for a decade. We spend close to $1 million a year buying data from certain data providers that are probably in this room or in this venue. And not everybody can do that at scale. So I think that's a huge part of it. Will it be in the future? Maybe in the future, the LLMs will have the ability to fill data gaps and deduct things that we can think of today, and it won't be an edge anymore. I hope it is, because we're gearing towards it, but there might be an apocalyptic universe where everybody can do everything, and to your point, there's no edge in analysis or data, and then it's about who are the guys that are doing it